Dear shareholders, welcome to CapitaLand's 20th AGM. During our last AGM, the world was grappling with a very sudden global health pandemic. Many of us will realize that above everything that we are concerned with as a company, the health and safety of our loved ones, neighbors, and countrymen were in fact our utmost priority. With the support of our employees, tenants, and customers, we were able to deploy technologies, execute new SOPs and strategies that keep our businesses functioning and resilient. Through financial assistance and staff volunteerism, we were able to provide relief to our tenants and communities, and frankly, this would not have been possible without the support from the shareholders. Despite the uncertainties, the crisis gave many of us at CapitaLand opportunities to learn new things as we adapted to new norms. We also found ourselves working closer with many of our stakeholders. The year was challenging, but no less fulfilling. Our globally diversified business model, which is equipped with multiple real estate expertise, worked in our favor amidst the headwinds that we were dealing with in 2020. At the beginning of the pandemic, retail, hospitality, and residential trading businesses bore the biggest brunt of the impact on the global economy. The related businesses at CapitaLand were not unscathed, but we were able to fall back on the rental income of our office portfolio, as well as the new economy business parks, industrials, and logistics assets, which we had acquired in 2019 through a Sanderson bridge. They remain largely resilient. Our residential and retail businesses also show much improvement as the economies gradually open up in the second half of the year. Geographical diversification also mitigated the impact. When China, one of our very core markets, became the first country to reopen its economy, its rapid recovery cushioned the impact to our overall portfolio as other markets remain in states of lockdown for longer periods. Our home market, Singapore, also quickly caught up in terms of recovery as the circuit breaker rules gradually relaxed. For the financial year ended December 2020, the group reported a net loss of 1.6 billion. This was largely due to 2.5 billion of non-cash, fair value, and impairment losses. It is important to highlight that the losses were limited to a few assets, which were most impacted by COVID-19, while the rest of the portfolio remained largely resilient. In terms of operating performance, the group generated approximately 770 million of operating PATMI, as well as 150 million of portfolio gains from meeting our annual 3 billion capital recycling target. The total cash PATMI generated placed us in a position to continue to distribute dividends to shareholders during a difficult year. The proposed 9 cents per share dividend has been put up as a resolution at this coming AGM. Our overall financial position remains strong. We have shored up more than 15 billion of cash and available undrawn facilities, and we have taken very proactive steps to manage our costs. In 2020, we achieved over $250 million worth of total cost savings. Our gearing was very healthy at 0.68 times towards the end of last year. More importantly, we continue to make good progress in the transformation of CapitaLand 3.0 through our 3 strategic growth pillars. In the development pillar, we continue to deploy capital to new economy sectors. Approximately 3.4 billion of new investments were made in business parks and logistics assets. This corresponds to 93% of the total investments made across the group in the year 2020. In fund management, we continue to ensure that our sponsored vehicles are efficiently structured. We supported the merger between CMT and CCT to create CICT. CICT now offers a much more diversified portfolio of commercial assets that has significantly enhanced its overall resilience and capacity for growth in a post-COVID business environment. We also back the expansion of the investment mandate of CRCT, which has since been renamed to CapitaLand China Trust, or CLCT. Being able to now invest beyond retail, CLCT acquired more than $1 billion of new assets in business parks and the remaining stake in Rock Square Mall from CapitaLand in the fourth quarter of last year. For the full year, the group's fund management fee income registered an increase of 4.4%, amounting to more than $306 million. Finally, in the lodging pillar, our long-stay focused portfolio achieved an average occupancy of 50% during the year. This enabled the lodging business to deliver a positive operating cash flow for 2020. We were satisfied with this set of results given the long and ongoing pause in the business and leisure travel. As a testament to the confidence that the hospitality players have in CapitaLand's lodging business model, we managed to secure management contracts corresponding to 14,200 units across 71 properties last year. This was the highest record that we have achieved in any given year. And we look forward to the new units turning operational, which will add to the future lodging income stream. Our transformation journey will not be complete without a continued focus on people, digitalization, and sustainability. I'm glad to report that we will also make good progress on these fronts. For CapitaLand, the push for a future-ready workforce to equip our employees with digital knowledge and awareness had long been underway. This allowed us to swiftly and effectively implement remote working when we needed to last year. Many employees were also motivated to improve their digital literacy to meet the new challenges posed by COVID. Across our global operations, the total learning hours in digital-related courses increased by more than 20%. Employees also look for new ways to improve accuracy and productivity in their work. Over 100 dashboards were developed by employees to enable faster data-driven decisions. Externally, CapitaLand's digitalization advancement were most evident in the expansion of complementary features and functionalities of the CapitaStar platform in 2020. Besides enhancing the offline to online experience for our customers and tenants, we were able to increasingly monetize our digital efforts. In China, for example, we reported approximately 200 million renminbi of online gross merchandise value. This was 10 times the value that we had achieved in the year 2019. Last but not least, I'm proud that we had launched CapitaLand's 2030 Sustainability Master Plan in October last year. The timing could not be more appropriate as we reflect on what must be done as a company to ensure our business sustainability through market cycles. As we resolve to place sustainability at the core of everything we do, we look forward to the support and participation of all stakeholders in this collective journey to achieve the ambitious ESG targets that we have set for ourselves. As I conclude this presentation, I would like to touch on CapitaLand's restructuring plan, which was announced a few weeks ago. This is our proposed next steps to accelerate the ongoing transformation. Assuming shareholders approve this transaction, CapitaLand's 3 strategic growth pillars of development, fund management, and lodging will be separated into 2 distinct entities. The first, CapitaLand Development, will comprise the more asset and capital-intensive development business. Because CLD's business model is not adequately appreciated by the public markets, it is proposed that CLD be taken private by CLA Real Estate Holdings, a wholly owned entity of Temasek Holdings, on completion of the scheme. The second entity, CapitaLand Investment Management or CLIM, will hold CapitaLand's fund management and lodging business. It will focus on FUM growth and driving recurring fee income. Subject to the completion of the scheme, CLIM will be listed on the Singapore Exchange, and CapitaLand will distribute shares to the eligible shareholders, excluding CLA, on a 1 CapitaLand share for 1 CLIM share basis. In addition, eligible shareholders will also receive CLA's entitlement to CICT units and cash consideration payable by CLA as consideration for selling the development business to CLA. By organizing our businesses in this way, we will sharpen our focus and will be better to match each business's risk-return profile with the appropriate capital source and capital structure, ultimately enhancing shareholder value. I would like to highlight that CapitaLand's unique ecosystem, comprising of development and investment management expertise across the asset classes, will remain intact. This will be facilitated by strategic arrangements between the two entities to enable CLIM to continue assessing CLD's development pipeline. We will share more when we release the scheme document and CLIM introductory document. I ask that shareholders look forward to the publication of the scheme and introductory documents and positively consider our proposal on how to advance CapitaLand for the future. I would like to close by saying that we will continue to conduct our business as usual, even as we work towards what has been proposed. That includes our discipline in capital recycling, pivoting our business towards new economy asset classes, and growing fee income via the investment management parts of the business. On behalf of CapitaLand's management team, we would like to thank you for your support and trust in us as we navigate through a very challenging period, not only for businesses, but also for humankind. Our promise to you is that we will remain focused on delivering the best returns for shareholders, and we look forward to your ongoing support. I would also like to take this opportunity to record our appreciation for our chairman, Mr. Ng Kee Cho, who will be retiring at the end of this AGM. Mr. Ng has served for more than a decade on CapitaLand's board, with the last 8 years as our chairman. Thank you, Chairman, for your faithful stewardship and wise counsel throughout the years. We would also like to take this chance to welcome Mr. Miguel Koh as the incoming chairman. We are certain that the group will benefit immensely from Mr. Koh's experience and expertise, and I would like to ask shareholders to also give him your fuller support. Thank you.